Real estate giant Compass just dropped its Q2 2025 financials, and wow, the numbers are something else. So today, we're going to break down exactly what happened, how they pulled it off, and what it all means for the bigger picture. Let's dive in.
And look, the company's CEO, Robert, wasn't shy about it. He came right out and called this the most powerful quarter in the company's entire history. Now that is a huge claim, so let's see if the data backs it up.
All right, first things first, we have to start with the biggest headline number of them all, revenue. This is the figure that really sets the stage for just how historic this performance was.
So what are we talking about here? For the second quarter alone, Compass brought in a massive $2 billion. To be precise, $2.006 billion. This isn't just a good number, it's a new all-time record for the company. Ever.
But you know, that huge $2 billion figure doesn't even tell the full story. It's a 21.1% jump from the same time last year. I mean, that's not just growth, that's an explosion.
So that leads to the obvious question, right? How in the world does a company this big manage to grow over 21% in a single year? Well, the answer really comes down to a two-part strategy.
Turns out, net growth came from two different engines. About 59% of it was driven by M&A, that's mergers and acquisitions, where they go out and buy other companies. But what's really crucial here is that the other 41% was pure organic growth. That means their own core business is just absolutely firing on all cylinders.
Now, growing your business is one thing. That's always impressive. But what makes this story absolutely wild is the context. Compass was putting up these numbers while the rest of the market was, well, not.
And this, right here, is where the story gets super compelling, because performance is all relative, isn't it? To really get how big of a deal this quarter was, we need to zoom out and see what was happening across the entire US real estate market.
Okay, so in Q2, the actual number of deals, of transactions closed by Compass agents shot up by a remarkable 20.9%. That's a huge green flag for a healthy business.
Now hold that number in your head, because during that exact same period, the total number of transactions across the entire US market actually went down. It shrank by almost a full percent.
When you see these two numbers side by side, it is just powerful. The overall market was actually contracting, but Compass was expanding at a blistering pace. They weren't just riding a market wave, they were creating their own.
And you know what happens when you're growing and everybody else is shrinking? It's simple math. You gain market share. You're taking a bigger and bigger slice of the total industry pie.
And that is exactly what happened. All that powerful growth pushed Compass's market share up to a new company high of 6.09%, meaning they control a larger piece of the American real estate business than ever before.
But here's where the report gets a little weird. As we dig a bit deeper into the numbers, we find what seems like a contradiction, a little paradox around the price of the homes they're selling.
So first, we got to understand a term called gross transaction value, or GTV. It sounds complicated, but it's really not. It's just the total dollar value of all the property sales their agents closed. Add up all the price tags, and boom, that's your GTV.
And for Compass, that number is immense. Their GTV for the quarter was $78.3 billion. That's a jump of over 20% from last year. Which, yeah, that makes sense, right? They sold 20% more homes, so the total value should be up by about that much.
So the logical conclusion is, if the total value of all their sales is up so much, the price of the average home they sold must have shot up too, right? Well, here's the twist. No! Surprisingly, the company reported that their overall average selling price actually went down by about 1%. So how is that possible? How can the total value be way up while the average price is slightly down?
Okay, here's how we solve this little mystery. First, if you look only at their core organic business, the average selling price in that part of the company actually rose by 3%. But, and this is the key, remember those companies they acquired? Well, some of those firms tend to deal in lower-priced homes. So when you mix all those new, less expensive homes into the total calculation, it pulls the whole company-wide average down. It's kind of like a statistical illusion that actually hides the underlying strength.
So, after digging through the revenue, the market comparisons, and that whole pricing paradox, what's the big takeaway here? What does this all really mean?
Here's the bottom line. Compass delivered an absolute monster of a quarter with over $2 billion in revenue. They did it by growing their sales volume like crazy in a shrinking market, which let them snatch up almost a full percentage point of market share. And it was all powered by a killer 1-2 punch, being great at their core business while also being really smart about who they acquire.
Compass has clearly found a powerful formula for winning in a tough market. You grow from the inside, and you grow by acquiring. It has worked like a charm. The big question this whole report leaves us with is a pretty simple one. Can they keep it up?